In recent years, AI has become an increasingly popular tool for traders and investors to gain an edge in their financial markets. One of the areas where AI has made a significant impact is in technical analysis, specifically in the development of trading indicators. By leveraging the power of machine learning algorithms, AI trading indicators can quickly analyze vast amount of data and provide insights that were previously impossible to obtain. In this area of fast-paced trading, AI trading indicators have become a crucial tool for traders to make informed decisions and stay ahead of their competition. So in this video, I will show you two AI-based technical indicators you definitely need to know about. With these indicators, you will find better and smarter trade entries in Forex, stocks, and cryptocurrencies. The indicators are 100% free and do not require a premium TradingView plan. So without wasting any time, let's get straight into the video. The first indicator I want to show you is called machine learning. The one that you're looking for is this one created by J.D. Hardy. This tool is based on the Lorentzian classification method. This method is a machine learning technique used in technical indicators to identify trends and potential market movements. The Lorentzian function is a mathematical function commonly used to describe spectral lines in physics, forms the basis of this method. In the context of trading indicators, the Lorentzian classification method involves analyzing historical market data to identify patterns and trends that match the Lorentzian function. Once these patterns are identified, the method can be used to predict future price movements. The Lorentzian classification method is typically implemented using a machine learning algorithm such as a neural network or support vector machine. These algorithms are trained on historical market data to identify patterns that match the Lorentzian function. Once the algorithm has been trained, it can be used to generate trading signals based on current market data. Basically, the indicator assigns a number to each candle bar, where the more positive the number, the higher the probability of an uptrend. The more negative the number assigned by the indicator, conversely, the higher the chance of downtrend happening. As a result of these numbers, the indicator issued buy and sell signals. It also includes a kernel regression line, bar colors, and trade statistics. There are plenty of options to customize the inputs, such as neighbor count, maximum bars back, and color compression. Various filters can also be applied to the buy and sell signals to make them more precise. For example, the EMA filter can be enabled to automatically cancel a lot of false signals. One of the advantages of the Lorentzian classification method is the ability to identify trends and market movements that may not be apparent using other methods. This makes it a powerful tool for traders looking to gain an edge in the market. However, it's important to note that, like any machine learning algorithm, the Lorentzian classification method is not infallible. It's essential for traders to use this method in conjunction with other technical analysis tools to always exercise caution when making trading decisions. One of those additional tools could be the main reversion channel created by this amazing trader/programmer, and adjust the setting as I'm doing right now, and it works as follows. The idea is simple. You wait for the price to retest the upper reversal channel, then a sell signal must be issued by machine learning. As a result, you will be able to enter a trade at the discounted price. Low quality trade signals will be eliminated too. Remember, the AI indicator signals are already filtered by the 200 EMA, so you don't have to worry about entering the trade too early. For long trades, just do the opposite. Okay, now let's move on to the second indicator. This tool is called neural network. Neural networks have been used in various fields to make predictions and classifications based on patterns found in data. One area where neural networks have gained popularity is the financial sector, particularly in the realm of trading. So, what exactly is a neural network? network. A neural network is a type of machine learning algorithm that is modeled after the structure and function of the human brain. It is made up of layers, interconnected nodes, each of which performs a specific computation. The network is trained on the set of input data, and the connections between nodes are adjusted to improve its performance in making predictions or classifications on new data. Neural networks are particularly well suited for tasks where there is a large amount of data. They are used in a variety of applications from image recognition to natural language processing and have shown promise in the realm of financial trading as well. Neural networks can be used as a technical indicator by training them on historical market data and then using them to make predictions about future market movements. One common approach is to use a neural network to predict the direction of price movements for a particular security. The network is trained on historical price data and relevant technical indicators used in the trading strategy. Traders can then use the network's predictions to make decisions about buying or selling a security. There are several advantages to using neural networks as a technical indicator for trading. One primary benefit is their ability to identify complex patterns and relationships in the data that may be difficult to detect using traditional technical indicators. Additionally, neural networks can learn from data in real time, allowing them to adapt to changing market conditions and adjust their predictions accordingly. This can be particularly useful in volatile markets where traditional technical indicators may not be as effective. However, it's important to be aware of the potential limitations of any technical indicator, including neural networks, and use them as part of a broader trading strategy. To add this tool to the chart, simply access to indicators and search for neural network. Choose this one created by known unicorn. Then access the setting and do as I do. Then what you need is to add one EMA to the chart and put the length to 200. The strategy that works well with the neural network indicator is based on order blocks. To implement this strategy, access the indicators again and search for order blocks with signals and set the sensitivity to 40. Before moving to this strategy, it is important to understand what an order block is. An order block is a significant price level on chart where a large number of buy or sell orders are placed. It represents an area where the market has previously experienced a strong level of support or resistance, or let's say supply and demand zones, and it is expected to have an impact on future price movements. When the price revisits another block, traders usually look for price action signals such as a reversal pattern or a break and retest of the level to enter trades with expectation that the price will respect the order block and move in the anticipated direction. Instead of using any reversal patterns, we will use the signals issued by the neural network to confirm the entry. For a buy trade, the price must be closed above the 200 EMA, wait for the market to retest the bullish order block, and then wait for the neural network to give a buy signal, which is in green color. For a sell trade, long story short, just do the opposite. That's the strategy on different markets and different time frames. If you have any ideas to improve these strategies, please share them in the comments below. If you enjoyed these indicators, please like this video and subscribe to Income Nomad channel. Thanks for watching and see you in the next one.